This is our video blog for May 2nd, 2011. And like most days, you really want to find the strongest currencies and trade them against the weakest. Today, you can see the dollar has a daily, weekly, and monthly trend that's down. However, there were brief amounts of real-time, incredible counter-trend strength. So, the first sign of some weakness coming back in would be around 2 o'clock, and you would want to trade that one against one of the stronger ones. Today, the yen doesn't quite have the same intensity of a downtrend as the dollar does. The weekly monthly trend is extremely down in the dollar, not so much with the yen, but it didn't have quite the intensity of counter-trend strength that the dollar has. So some people might have even looked for sells in the yen at 12:30. If you scroll back here on the euro, you can see the euro was strong, daily, weekly, monthly trends up. Swiss is also strong, the Australian strong, but at the time the Swiss was weak. It wasn't until about 5:10 that the Swiss had some strength. So really, looking to trade the euro yen starting the day off was one of the better opportunities. So starting the day off, you can see the price went from below to above the hourly moving average. That's a sign of strength. A lot of times they kind of chop around there. You might have even waited for the high of here to get broken before getting in, or if you bought the breakout here and as it went up and came down, you get stopped out with a small profit or break even or small loss, 3 or 4 pips max, because it did go over 10 pips your way. And then on this pullback again, notice once it goes up, makes a low, goes up, makes a low, goes up, makes a low. The lows are higher. That's a sign of an uptrend. So anytime you see swing low, high equal to or higher than the previous swing low, you got to keep getting back into the trade, and eventually the selling up here at the top ended and the market took off. And you draw your fibs on the last wave up. Let me fix this, and you will see that the market went right between the first and second fib target, a weekly pivot level here, and the whole number, which typically has major sell orders there. So it was also right near, within a pip or two of our upper containment band, and after coming from the lows, usually the red 1.5 band is the end of the move. So excellent place to get out. Let's review this trade using our new tipping point and Momentum Pro. This is what I mean by these tools really help you know what's going on an immediate basis. Most traders get into a trade, they're not really sure if the trade's going to go their way or not go their way, and it might be 30 minutes or an hour later before they get stopped out or bail because of boredom. This tool really lets you know within 5 minutes usually if the trade's going to work, and it gives you real-time adjustable odds, which is one of the reasons why I love it so much. So let's say you got into this trade here when it kind of went sideways and broke out right here. First of all, notice before it broke out, there were a higher percentage of euro pairs going up and yen pairs going down than the reverse. The momentum of those and the volatility of those bars were kind of mixed. But when it broke out right here, initially you had a very high percentage of the euro pairs going up, yen pairs going down, and with decent volatility. The next bar, you had a decent percentage of euro pairs going up and yen pairs going down, but the volatility slowed. And then as it went sideways right here, the percentage over those last two 5-minute bars over the next 10 minutes were just slightly inching their way up, and the volatility was actually to the downside. So if you're in this trade and you had a tight stop, and this is usually before 2 o'clock, there's usually not big moves most days. As soon as it starts going up, you raise your stop. As soon as you see action like that, you might raise your stop again. You wouldn't have lost more than 4, 5, 6 pips max there. And then this next breakout, first of all, notice on the pullback here, initially there's quite a few euro pairs going down, the yen pairs getting stronger, and then it falls off a cliff. The volatility of the pullback was less than the volatility on the way up, which increases your odds. And then as it takes off right here, you can see 2 bars with high volatility and high momentum, mass, or I should say force equals mass, which is a tipping point, times velocity, which is a Momentum Pro. And it really lets you see what's going on. You can see, after those first 2 bars, the volatility kind of dried up, and it went sideways. So you might have got out of that trade with a small profit. You might have even bought this breakout right here that would have had a loss. And then during this pullback, initially there's quite a few weak bars in a row. Volatility on only one of them is weak. So you might wait just a little bit longer before getting into this, and maybe bought above this bar's high right here, and you start to see a high percentage of euro pairs going up, yen pairs getting weaker, but without much volatility. So just like before, you would tighten your stop, and it kind of went sideways right here, and you might have even got out of this trade with a small profit and then bought again the breakout here. Notice when you bought that breakout here, very high percentage going up, somewhat decent volatility. Anything near the white line or above it is excellent. And as it went up right here, there's a little bit of a pullback here with a high percentage of euro pairs going down, yen pairs getting stronger, but there was no momentum behind it. But you always have to be aware that that's a sign of a possible reversal, so you tighten your stop. And then it went right up to this area here, as you can see, without explosive momentum, even though towards the end of it there's a pretty high percentage of them going up, and then it fell off a cliff right here during the sideways action. So a good place to get out at least half your trade, with a 20-30 pip profit. If you got into that trade right here and held, you made about 40 pips. And that's how you use these tools, to minimize your losses. A lot of times 3 to 5 pips. Sometimes you have 5, 10, 15 pip win. If you don't see momentum going your way, you're up 10, 15 pips, you want to get out. Now again, later today, the Swiss became really strong, and the daily, weekly, monthly trend of that is very strong. The yen was very weak at the time, so you might have, looked to buy the Swiss yen. Now a little bit afterwards, the yen, regained some strength. At that time, the dollar also started to show it was starting to get weak. So let's look at the dollar Swiss to sell. I'm just going to update this chart. Between 5 and 6 is when that happened. And first of all, notice as this thing went up to its highs in the upper containment band, usually a likely reversal area, the previous first and second and third times it got hit, pretty decent dollar pairs going up, Swiss pairs going down, very high momentum for that time of the day. And later on, as it went sideways right here during 3:30 to 5:30, notice there was a decent percentage on some bars going up in the dollar and down in the Swiss. However, as it went sideways here, the volatility to the downside was slightly higher than the upside, and the momentum behind it, the velocity of how far they were actually moving on a bar by bar basis, was showing almost no movement. So in other words, the dollar pairs on some bars were going up, but 1/3 the amount that they usually do for this time of the day. And that's it doesn't get clearer than that. This longer term trend is down. It's at the upper containment band, which is usually reversal. We have a counter trend sell signal right there, almost to the pip at the high of the day. And when it finally breaks, you might have actually sold this, made a little bit on that trade, sold this, maybe broke even, sold this, made 10 pips, and then sold again. And you can see on the way down, a lot of very high percentage of dollar pairs on most of these bars going down, Swiss pairs getting stronger, initially with a lot of mass and velocity, and then it kind of just runs out of steam right there. So you might have got out of this trade at your hourly moving average, because support levels, if they don't have a lot of mass and velocity, usually contain the price. And sometimes they dip a little bit underneath it, then they come back up. I probably would have sold right here, and on the way down you can see initially a high percentage of dollar pairs getting weaker and Swiss pairs getting stronger, but momentum wise it just wasn't there. So you had this is a perfect example of an opportunity to get out of this trade, a 3 or 4 pip loss or break even, or even 3 or 4 pip win. You had the opportunity to. And notice as it went back up, it's above the hourly. This is a weak currency. You might have bought this breakout right here. If you did, notice a decent participation. It's a broad-based move up without that much momentum. So again, you move your stop near break even, you lose very little. When it finally failed to go higher, what a great place to look for a counter trend sell right here, or underneath the lows. And look, mass times velocity equals decent size move. You always want to draw your fibs on the last wave to get an idea of where your profit target is. And your profit target's right near the lower containment band, and there's a monthly pivot level right there. We also have a counter trend buy signal. Notice initially extreme momentum and participation. It's a broad-based move down. Pretty much all the dollar pairs are falling, Swiss pairs getting stronger. This is right around 10 o'clock here. You can also see at 10 o'clock in the currency meter extreme weakness here, extreme strength here. So you should always have this up on one of your monitors, just to spot that. And those trends are likely to continue. And it kind of went sideways here. The downwards velocity kind of slowed, and you might have got out of the trade down here somewhere around 34. You made about 30 pips on that trade. The secret to trading is small losses, bigger wins. And everyone likes to have a high winning percentage, but it's really insignificant if your losses are 3 to 5 pips. One win can erase, an average win can erase 3 or 4 losses, and an exceptional win can erase 10 losses. So, and a 30 pip win like this can erase 6 losses. If your losses are 6 pips and you got 30 pips there, I'm sorry, if your losses are 5 pips, it would erase 6 losses. If your average losses are 6 pips, this would erase 5 of your losses. So you don't have to have a very good accuracy. And quite a few times you get into trades and you only make 5, 10, 15, 20 pips. You're not always going to get the big wins. Let's go over one more example. Extremely weak CAD today. And usually, for the most part, the dollar and the yen were mostly weak. I wouldn't blame somebody for wanting to trade either the Swiss against the CAD or the Euro against the CAD. So we'll just quickly look at those two pairs to end this blog post. Euro CAD, very likely to explode up, and guess what? It does. And you start to see, as it's going sideways underneath the hourly and it breaks out. This is a sideways rectangle breakout. The longer term trend is up. You get in, you start seeing, again, even before the breakout, the moves to the upside were more intense than the ones to the downside, volatility wise as well. And when it breaks out right here, good participation. It doesn't really have the best mass and velocity behind it. The mass is there, there's no velocity behind it. So I would have moved my stop up, near break even. And luckily we didn't get stopped out right here. You can see a good percentage of Euro pairs falling, CAD pairs getting stronger, but with no momentum. So, whenever that happens, you have to be prepared for possibly being stopped out, but it doesn't happen. And then it shoots up. The bigger the fib, the more likely the fib target is going to be to hold. This is a kind of a tiny swing, so it's going to be a lot easier for the market to go through these fib targets. I prefer them on, 25, 30 pips or bigger moves. 50 pips are perfect. But as this starts going up, you see mass and velocity and, some counter trend sell signals right here. Once the upwards momentum kind of runs out of steam up there, you might decide to get out of that trade somewhere at 90. But you're in this trade somewhere around 33 for an astronomically big win. And usually above the upper containment band, somewhat risky to buy pullbacks. You might have got in here, maybe had a small loss, small win. Bought this little deeper pullback right here, small win. And notice, initially you don't know if this is the beginning of a downtrend. But guess what? It comes back up and it breaks the highs. That's a sign of strength. So when it pulls back and doesn't break the lows, you might have bought this breakout right here. And again, mass and velocity come in. It's very likely to go to the next fib target of this last wave right here. And there it is. It's way above the upper containment band. So any sign of the mass and velocity slowing down, you want to get out of the trade. Maybe you're out at 20. This is a riskier trade, but you made 20 pips on it. Don't get greedy when the market's above the upper containment band. The other one that was strong was the Swiss. I think the CAD is the top one on this pair, so it's the CAD Swiss that we'd be trading. And a weak CAD, strong Swiss, and you can see exactly what happened. And notice on the moves down, our IntelliTrend bars are red. A very high participation. Initially on most of the bars, not a whole lot of velocity behind it. So you might have got out of half your trade here and the other half here when it double bottomed. Notice on the way up here initially some real momentum behind the moves on some of these bars. Then it pulled back and went up again. That momentum and velocity to the upside is gone. So it's a safer trade. Some traders might have gone short right here, and if so, they would have felt pretty good about no longer having any upwards velocity. But it's usually safer to kind of wait for a 1, 2, 3 pattern like this. You're short again. You want to draw your fib on the last wave. Fibonacci profit targets usually are the best places to get out, and you can see it almost touched it to the pip. 2 counter trend buy signals right here, and as it broke down initially, you have a lot of mass and velocity coming, and as it works its way down, there's one bar right here, and then it kind of slows down, and the velocity to the downside slowing down. You're at the lower containment band, you're at the fib target. You want to get out. You're short at 22, out around 90 for about a 30 something pip move. Very high probability.